Welcome back to the chat once again, guys. I am back. I actually returned this evening from my trip, and today is Monday. It's quite unfortunate I couldn't come your way with the weekly overview, and so I'm going to try my best to come up with something for us to use as the roadmap for this coming week. Of course, I have actually reversed Monday because today is Monday evening. I've actually used the replay button to take off the start of the week. I just wanted us to have a look at how the market closed from last week, and then we'll take it from there. All right. So if you could quite remember, I still have this um, range marked. I'll move down to the dailies, and you could see that this was the target I was expecting if dollar was able to break from this deficiency level on the dailies, right? So I mentioned that price is actually trading in here, and so are going to take a very good look at how price trades up around this area, and the behavior of price would let us know whether or not price is likely to trade to this point, right? And so we had price check out this trade bullishly into the mid portion of that. If I should draw it out, so like that, right? But then it encompasses the opening gap as well, even though the opening gap is marked here. So price traded into the mid portion of this inefficiency level on the daily on Thursday, and then on Friday we saw price trade down. If you actually go to the H4 and H1 on Friday, you could see that the order flow had changed from bullish to bearish. And so coming into Monday, it was quite obvious that a few significant behaviors on the H1 could point you to being bearish dollar. Okay. So we're rejecting from this inefficiency level. And then Friday showed signs of bearishness. So let's move on to today's candle, right? So we had a very huge bearish candle closing below the opening gap, also into this inefficiency level we have here on the daily. Price has yet to close below it. We are still closing in it though, but then we massively closed below the opening gap we had here, right? So on the H4 now to my target for the week, if this is truly it, it means that this from this high to this low, this is a pullback, and so ultimately we'll be expecting price to come all the way to take out the sell side liquidity here. But in the meantime, this low here was one of our likely suspects, and this here another usual suspect, but only when price breaks below this inefficiency level, right? So this low, that low, that low, and ultimately the low here on 95.5, right? So how are we going to go by this? We are going to take it day by day, just as we've always done. Today we've seen a very massive close. If we check the calendar, I can see that we do have lots of USD news coming this week, and so it'll be very critical for us to see how we trade. In the meantime, I would love to see price use the opening gap again as a resistance level. for continuation. I want to see a close below this if dollar is really actually very bearish. A close below this into this sell side liquidity, this and that, all of them here are a draw on liquidity. So as the week develops, we'll definitely see, but we should keep an eye on our targets and see how the daily candle closes and also how the H1 forms during the intraday. All right, so I'll switch to the H4. Switch to the H4. On the H4, you could see that where we have the opening gap, we do also have left an inefficiency level on the H4, and that's where I expect price to come in. If price is actually very bearish, a little sweep above this high would be enough for us to trade to the continuation of the downside. Change this to red. Right? It's not necessarily price should trade very deep into the inefficiency level. It can just wick, then give us the signature to continue to the lower side if price is actually indeed very, very, very bearish. Right? The H1, yes, I do think that now that price has actually come to close below the back again inside of this range, it is more likely that price will come back for this one level here into that and continuation. So what is going to happen is once price takes out this, then we'll look out for the price signatures on the lower time frame to continue lower. I do not know if price is just going to work this and then continue lower, or price is going to give us some sort of consolidation before continuation because of how bearish or how beefy today's candle closed, giving us when Monday gives us a very huge range, we usually see the rest of the days that follow it quite doing quite consolidative. Let me see for Tuesday. I think there was one of the days that Monday actually gave a very huge candle, and the rest of the days was. Uh, but yeah, so this is the expectation. On the H1, we expect a run on this high, above this high, and then have a continuation to the lower side. But all will make sense when price actually takes out the high, and then we can take it from there. This is an opening gap here. This low to that open. This is an opening gap. So let me mark that out. That's an opening gap. Right? Price use that here. And then it's more likely that we'll come back to it once again. Right? So I'll go to USD. USD on the other hand, this was going to be one of our liquidity levels which is taken. Clear this. This has been closed above. So I'm going to expect price to use that as support level for continuation higher. This is a good target for us for now. And then subsequently this. And then ultimately these highs, right? But we cannot tell. We are just going to focus on the one that is very close at the lower ones. Right, so price should use this as this support for continuation to the upside. Let's see for the H4. Yes, we also do have this inefficiency level here on the H4. Right. It's also here on the H4. So I'm going to expect price to come back to it for continuation. So what's going to happen is we would expect price to take out this low, then we'll watch price from there. The liquidity on the H1. Yes, that's about it. This high failed, and so it is more likely to come back in here. So I'm going to put an alert here. So that will be the only time I'll come back to price. Just check what price is actually doing. On cable, yes, also closing above this inefficiency level here. And so all indications are pointing bullish for majors. We've already reclaimed this one, so I don't expect price to come all the way down. If you will, should perhaps take this low for liquidity and then continue to the upside. Let's see the H1. Yes, we do have very slight inefficiency level here, but also these two candles are making up an order block. Price trades away from it and then come back into it and then expands away from it. So if anything, taking out this low should be enough for price to continue to the upside. This, perhaps that, right? This perhaps should be it. So that'll be it for today. We'll watch price, how it trades for tomorrow. If it consolidates, we'll sit on our hands and then wait for Wednesday, Thursday. As you can see, it's packed on farm payroll. On Friday, we do have CPI. And so it is likely that there's going to be some sort of manipulations ahead of the Friday news release, big release, or 8:30 in the morning. All right. But in the meantime, we stay put and watch how our levels are going to be treated. I'll catch you tomorrow with new episode of our daily market review. Thank you so much for your time. If this video was any helpful, do like and subscribe. Consider sharing with your friends who you think may need some sort of help watching this. Thank you once again. See you.